The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here for the Friday edition. This is Friday, the 19th of April, edition of the Tiger Technicians Hour. The Dow is up 206. This is going to be very important because it's trying to establish some kind of a base from which to bounce. And let me just show you this. This is what I show my subscribers every day to my opening call. Look at these. Look at this right here. So the white charts over here. Look at this automated Chapman wave support levels in the daily chart right there, a whole bunch. And look at the plethora of support levels in the 120-minute chart. And that makes this base really important. You can keep coming back to test the base. But this is also like a springboard, just on the very short term, having had that overnight. You go to sleep last night, the futures are down 4 or 5. The S&P's, the Dow is down, maybe 18 or 22. And the next thing you know, you're down almost 700 in the Dow, 70 points in the S&P. That's because of the Israel very select. This is the response to Iran. And, wow, a market just tanks. Gold shoots higher. It's just oil goes higher. And then a couple of hours later, what are we looking at? We're looking at something completely different. Look at this right here. This tells you the whole story. Toodle, toodle, toodle. Right there, just humming along at about 50.51. This is 7:30, 8:30, even 9:30, 10 o'clock. And then, whoosh, I see this chart. I couldn't believe it. I always have the chart up, even though wife and I are sitting there doing other things. But we're looking at, zip, it goes down. And at 10:20 or so, it makes a base, and here you are down to the 49.63 level, and then look what happens. It moves up, and the 9-period moving average went positive right there. This is the E-mini 10-minute chart. It goes to 5,006, and lo and behold, here we are at 5,050, and that 9-period moving average is... How many times do I talk about the magnet line of the 200-period moving average? Has been sitting at the 200-period moving average since 7:50 this morning, Eastern Time, 10 to 8, at 5047. And it's trading right now at 5047. And every bar just keeps trying to come back either above or below this level. That's a magnet point. And until it breaks away either to the 5,063 level on the upside, or below 5,000, I'd say 5,037 on the downside, it's just kind of stuck for the moment. Isn't that interesting? Okay, so let's just get back to the story here. Has anything changed? I don't think anything's changed. And yes, we're very oversold, and I just showed you all those support levels. But does that mean that we've made a major turnaround? I don't see this. So yeah, let me run the numbers. This is Technical Friday for... the Tiger Technicians Hour. Let me just run the numbers. Dow's up 211. S&P, which was down 70, 12 hours ago. Exactly 12 hours ago, is now unchanged at 5,010.73. I haven't finished this. I don't know why I didn't finish it. I thought I had. Did I do it on the SPY? I thought I remembered it. Yes, I did it. Okay, I thought I had done this. I did this using all the Chapman wave techniques. Now, let me just go through this because it's so important. I'm going to do a kind of an overview right now of what I'm looking at, and I'll be doing it for subscribers for my opening call. Every weekend, I do about an hour long, sometimes a little more, sometimes as well, around an hour. Overview of what we've got, what we're looking at, our positions. We've raised a lot of cash. We're short, but we're also looking at, we've got long positions that are working. But at the same time, I give an overview of what I'm looking at. So I drew this in. This is a technique that I developed a long time ago. It's the arch technique. And I try to find a midpoint from which I can say the number of bars on the left can equal the number of bars on the right as there's this arch formation. And then I use a technique that I call the Chapman Wave inside wedge, target support line, pink on the way down, green on the way up, dash green on the way up, dash pink on the way down. So you can see it just keeps coming back to this magnet line, this wedge line right here. So now the S&P is down 25 cents. But look at the MACD is weak. This is the daily chart. The on-balance volume, horrible down there. Stochastics flat at 4.7%. What did I say for those weeks and weeks and weeks that I was saying when the stochastic is over 80%, that's positive. When it's in the 90% area and flat and holding steady above 80%, that's bullish. That's what you want to see. In this case, it's under the 20% level. It's under the 10% level. If you're bearish, this is what you want to see in the 4% area. So until the stochastic actually bounces to 12 and then 15, you got to think of this as a negative, right? But that's not the issue. So this is the S&P. It's made a leg D, maybe a peak D because it doesn't get above 324.61 for the rest of April, which is 1, 2, 3, 4, 5, 6, 7, 8 trading days away. And so I'm going to keep this chart up for the moment to say the arch formation with the 9-period moving average negative is very important. Now I'm going to jump around because it's Technical Friday. I'm trying to give you an overview of what I'm looking at. So this is the technique I developed a long time ago, and I use this all the time in trading the E-minis. But I want to also look at it and tell you, as I try to be as objective as possible, but I need to be, my throat needs to be working. Tea. And I use this is what I call indicator of last resort. It's the 914. You've heard me talk about this for ages. You heard me talk about the round numbers. I'll get to that as well, because that's part of what we're looking at. The Dow is up 174, but from that 9-period moving average crossover to the upside on the 3rd of November, only recently, right there, on the 4th of April, did it turn negative. And it's still quite negative. It hasn't actually turned positive. Look at the S&P. Negative. Now the price is way below the pink 9-period moving average. The 9's under the 40. QQQ. Way, way below at 420. Way below, down 2.91. Below, this is the daily chart. The 3 lines you're looking at, the thick gray is the price, current price. Green is the when the 9-period moving average is over the black 14-period moving average. And when it turns pink, it means it's negative. All right? IWM, Russell 2000, very negative. Trading at up 60 cents right now, 193.47. Now let's go to the XLK. This is the select tech sector. Look at that. It had a little brief moment where it was pink, but from that November the 3rd break to the upside, it had a brief, about a 4 or 5 days of negativity right there in January. Then it was green. And now look at this. Deeply pink. But the most important one, the one we've waited and waited and waited for, is the SMHs. Down 258 to 206.97. This is a sign for me to be careful. I'll be back in a moment. Basil Chapman, Dow's up 174, S&P's down 8.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So I needed to go through this Technical Friday. I want to go through some technical aspects of why we're still negative the market and what's going to happen to really get us positive. In the meantime, this is a big concern to me. The daily chart of the Dow is in a sell mode. It keeps hitting this Chapman wave inside wedge target support line, but now it's gone sideways. Is this going to be a fulcrum where you get a cluster formation here and then we break to the downside and we get to the Dow 37,100, 37,100s? 37,132 low of the 18th of January. Well, it's a work in progress, and so far the stochastics at 7%. It's really struggling right here. We'll have to see what happens, but I can just tell you this: if we take out 37,500 by this coming Tuesday or Wednesday, that is a big problem for three reasons. One is the Dow chart is now starting an acceleration to the downside, meaning that the majority of Dow stocks are not really that are positive, are not helping the market at all, helping the Dow, number one. Number two is we're only at a peak C in the monthly chart, and it should still go to a leg D before we start to get really, really cautious on the longer term. But the long term right now is still bullish. But number three, and this is really key, is that if I use this as a phantom peak, and now it's Technical Friday, so I can talk about it, this almost exact unchanged level right here, when it went to 36,264, and then the next day it went to 36,296, that's 30 points. That's a little bit much. But this one here, to call it a phantom peak, this one at 37,000, a second one at 37,778, going to 37,790, just 12.12, whatever it is, points away, says I can use that. And why do I want to use it? Because peak D is where other things can happen. I know this made a peak C1, C2 top. I've already discussed that every day this week. I don't want to discuss it again because that acted like a sell signal, reason why we're short and remain short on the short term. Still long-term long. We've got our long positions. But look at this. The YM made a legitimate peak D. And I have to wait for the end of the day before I can put a down arrow to say it's got a sell signal. But on the daily chart, in this particular instance, yes, we've gone to exactly the level that we were looking at right here, to the 200-period exponential moving average, and now we're having a really good candle. So the day is young. I mean, look, I had said earlier when I did Tommy's show at 9 o'clock to 10 that this is the first part. This is the assessment of what happened overnight. So it's between 10:20 and 10:40 this morning. That's the folks that said, okay, now we know what's going on. Now we're going to be able to start putting in buys. We're going to start shorting. You'll know exactly what's happening within the next 30 minutes. Just on the second part, what's really the third part of the session. We've already had the V-shaped comeback, went very positive, and now there's a consolidation, and we'll see if that's going to keep going. But look, the 9-period moving average in the daily is still very weak under the 14. The MACD, the histogram is improving, but very slightly. There is a W formation in the on-balance volume in the daily, and the stochastic's gone a little bit higher to 8%. However, this is what I'm looking at. The weekly chart suggests, and it held exactly, look, this is the Chapman wave inside wedge, target support line right there, just bing. Wow, that was close, and just exact right there. And it didn't look like it yesterday. I thought, one day, how are we going to do that? Well, now what we got is something even more impressive. We've got a peak D. Look at that peak D right there back in September, I think it was, how the Dow pulled back sharply towards the 200 period in the weekly chart. Now we've got a peak D, and the 9 is down, and the 14 period moving average is down, but it hasn't even got close to crossing negative. So that's why it's so important. The third thing is this weekly chart. Actually, probably second. That should be the third. And because of it, I'm saying I have to keep that phantom peak A to make it a peak D in the cash, the Dow index. The YM has already done it. The E-mini futures have done it. Peak D, a legitimate peak D. I haven't got a down arrow yet. I have to wait for Friday at 4 to really see exactly what's going on and to see if it's initiated one. But wait a minute. The SPY only went to a peak C. So I have in the Chapman wave, there's nothing I can make up here. It's a C, and the other's a D. But the futures trade, I wouldn't say 24 hours, but they're trading all the time. So I have to give some import to that because the Dow is doing the same thing. Look at the QQQ. It's already gotten to a peak peak D in the weekly chart. And look at that sharp pullback, pretty close to a sell signal in the weekly. Sell mode certainly in the daily, down 384. Look at the IWM, the Russell 2000. There's your, there's your peak E that I was talking about. And you're right now at the 618 retracement in the weekly chart. Is this going to hold? You're at the 200 period moving. You've got all these things that say you should hold, you should hold. Does it hold is the question. And we're going to see, because if the IWM next week at all breaks under 190, that's a big deal. That really affects the weekly chart. Look at the XLK. XLK, this is the select Spider Tech Fund. This is a peak E. Look at the depth. Look how serious that is down there. But it's only a peak C in the monthly chart. That's very bullish looking out. So I'm very concerned because I've got my Ds and Es in the weekly charts. I didn't expect the weekly charts to be impacted like this so severely in just a very short period of time. It's really a week in which the deterioration has occurred. And that, to me, is the issue. I know a lot of people are saying, yeah, we're making a low, we're thising, we're thating. I'm using my technicals, which I've used for years. That's how we got that March low, March the 6th in 2009, the exact low on Friday. The S&P made its low on the Monday. That's how we've got our March low of 2020. We're still long that. We've got our October low of 2022. We're still long that. Short term, I'm kind of worried here, and I'm worried because of three things. TLT. Look at that. It's fading now. It's only up 13 cents. That's bonds. It's in leg B, but a gray leg B. So the TBT made a peak E, but it's holding really well. And it says to me, don't ignore the fact that the bonds technically are weak and the yields technically, I don't mean what anybody says, I don't care what anybody says, are holding really well. It made a peak D doji candle. Look at this price time match. Look at that. Look at that beautiful cup formation. It went right into that area. It actually went to the top. I normally do it to the top. In this case, I go step by step. But if you're looking at it, that was the top right there in the TNX. That's the 10-year yield, 13th of November. And this gets smoothed out. But right now, I'm giving you the price, and the price is 46.96. What was the high right? These double tops are unbelievable. What was the high right here? 46.90. If I can actually read the darn thing, it's being covered up. 46.96. Unbelievable. To the tick. And it's holding so well. Look, the 9's over the 14. I'm a little concerned. I wouldn't get too carried away. We've raised cash in for a reason. I am nervous short term. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
morning, everyone. As I say, this is Basil Chapman. I did the first hour with Tommy O'Brien. I'm hoping that he'll be back on Monday. We miss him a lot. And so this is the Dow, I say between 1020 and 1040, kind of, that's where we get a feel for do new buyers come in. That's the whole thing. But I was talking about the TNX, which is the 10-year T-note, Treasury note, holding really well in the daily. Leg D in the weekly, and I do not like peak Ds way under the previous high. That always says, oh, you've got to be a little careful here. So far, this is one that the technicals are saying 9 over the 14, great. The MACD rallying not as strong as it was when it went to the high just under 50 before, but right now, still very good. The histogram's positive. That's the vertical. This is the vertical bars. This is the 0% line. The stochastics at 85% and rallying, and that's really important. And the monthly chart is walking the 9-period moving average. You're like, and that just says to me, hey, you got to be careful here because these yields are not giving way. They're still holding the higher range. Question came out talking about yields because, of course, the yields affect many of the banking stocks, but Berkshire Hathaway is in the XLF. It's considered I guess it is a financial stock. It's really a conglomerate. It's trading right now up 381 at 403.74. Now look at this. You see this chart on the left? Have a look. What have I talked about for weeks, for months actually? What have I been talking about? Highs that have been made at round numbers. So you look at this and you say, okay, well, what's the big deal? Well, look at this. I'm sliding it over. And what was the high back in February for Berkshire Hathaway? This is Buffett's stock. 430.00 round number high with a 422 open on the 26th of February. Where's it trading now? 226 on the 20th. Well, that's good. It's trading after hitting 395. It's trading at 403. I would say that was a pretty big pullback. And look, you've almost got yourself an A to B equals C to D in the weekly chart, but it's only a peak C in the monthly. So that's still very bullish. So the question is, what's the wave count? We had a peak E underneath the previous. Remember, underneath the previous high, it's never a good sign. It took a lower low. It's acting okay today, but at the technicals are still pretty weak. The weekly chart technicals are still really strong. It's at a peak D. It did a dreaded H. It's taken out. The left side low. It has 2 weeks in which to close above this low of 398.78. And so far, it's trading at 403.5. Very good action so far today, just in terms of the dreaded H pattern. That's all. And the monthly chart is still very good. Where is key support? I would just say that if it closes under 392 over the next week, that's a problem. Then it's going to last a little longer and it will impact the weekly chart. So that's the level to watch. So with that said, what was I about to do? See if I get interrupted. Then the chart moves. Oh, high-grade copper. High-grade copper, very sharp move up. Even today, these commodities are just moving. Look at this, 4.49. It broke that left side, right side price time match last week, pulled back this week, and now it's gone sharply above in leg C. Wow, copper, huh? So copper is usually a good sign for the economy. But I think this is different. This is more the buying of commodities because they started to move up and people are trying to get the best price. So it's a leg E, could even be the Chapman Wave instant restart because with the 3 bars it broke to a new high. I'm calling this just for now E. And that's a C in the weekly chart. Look at this beautiful cup formation. Ay, ay, ay. Look at that. Oh, so the high, I made it to this high, but that high right there, this is a continuous contract, so the price will change. But my price right now is 4.42 on the week of the 27th of January. Where are we right now? We're at 4.49. We've broken out, and it's a leg C. It should still go even higher. So that's helped the DBA. The DBA, which is the DBA Agricultural Fund. Is that correct? No, cocoa is helping it. So that's independent. The DBA, I can't believe, is the DBA Agricultural Fund. You know, there is inflation. I don't know what people are thinking, because when you get your grains moving up like this, or whatever it is, the commodities moving up, that automatically means that there has to be price increases at the core. And that gets transferred, each one gets multiplied as it goes to the consumer on the retail side. So I'm a little concerned about this because look at that DBA. We're still long from 45, from 1377. And at this point over there, I said, no, it was right here. I said, I don't know if I want subscribers to add to this position in the 22s. I mean, maybe, no, was it? No, it was way back here in the 20. I said, maybe you can see 2 points. What are you talking about? It's a 26, 24. This is, look at that leg. And I've called this a phantom peak. It's actually only B technically. I've called this a phantom peak because there was an exact, the DB Agriculture Fund, the week of the 9th of Feb, did 22.18. The following week, it went to 22.18 as a high. So I said, well, it could have been 1 penny lower, which would have made a peak. And I did get a little hiccup in the on-balance volume. So I'm going to call that a phantom peak because I want to be ahead of the game. And now, as we stand right now, this is a Chapman wave, green Roman candle. At any time next week, if for one day there's a close below 25.52, we could test this week's low of 25, round number low, 25.00. But if it closes above whatever the high is today, wow, that is really positive. Wow. Okay. So with that said, I just needed to check out a couple of questions. Is that a question for me? Okay, no, not for me. Okay, I'll get it. Yeah. So a good question is, so what about that round? Where was it? What about the round number in NVIDIA? All right, let me get to that right now. So NVIDIA made an all-time high with a round number of 970.00 on the 8th of March. That was the all-time high. It pulls back in a rectangle and a cup formation, retested, couldn't take it out. That was a peak C1 and C2. It's just like the Dow. It just fractionally missed, but all the technicals suggested that could have been a peak D. So I called it a peak C2 with a plus sign above it. And that's like a sell signal. And where are we now? 974.00, all-time high. We're at 816. This is NVIDIA, the greatest stock on earth that everybody was talking about, and it could go nowhere but up into the 1,000 area. Well, as I look at it, this is now taking a really well-earned digestive phase, and it could turn out to be a little bit more than just a couple of weeks. It's already 1, 2, 3, 4, 5, 6 weeks. It could go into 7 and 8 weeks before it actually starts to stabilize. I'll be back. Dow's up 134, S&P's down 18. What a divergence in price there, huh? Is it on 680 yet? I'll talk about that in a moment.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Look, so I was asked about the VIX index, which went to a higher high. The high that was made back in October the 20th, the week of the 27th of October, when we got that major turnaround, was 23.08. Did I type that in? No, I didn't. I should type that in. 23.08. I can't remember what I said. 29, 30th, whatever the week was of October, I'll call it 29, 23. So that saw a plunge from 23 down to 11.81. The high today has been 21.36. And look at the stair-step move in the volatility index. And that just says to me, the concerted buying is telling me that fund managers are starting to, over the last, so the low was 21st of March. I would say that it's towards the end of March, towards the following week to right now, fund managers have been buying. And now what we might see, if the tension in the Middle East just has this hiatus, a little quiet time, and I don't see any reason why there shouldn't be a quiet time, we could get that bounce, that oversold bounce that we've been talking about as the last couple of days. But you can't get a bounce that doesn't hold into the end of the day. So that makes today's close really important. So we have someone, I believe. So let me just give us some summation here. Just add a question. Are you bullish? No, I am looking at the market. I just went through the weekly charts, and I'll do that again. The VIX index is telling me that 200-period moving average in the weekly chart of 18.95. If there's a retest anytime next week, that's going to be an issue. Oh, we do have a question right here. We have John in Philly. John, how are you?
Basil, I'm doing very well. Thank you for taking the call.
My pleasure.
Basil, I wanted to ask you a very specific question regarding the NASDAQ 100.
Yes.
I'd be much obliged. I know you are fully prepared to answer any question on the QQQ, the ETF that tracks closely the NDX 100. But I'd be much obliged if you could also extend whatever answer you give to the NASDAQ 100 index itself, the cash index. But the question for you, Basil, is as we are this decisive decline, is there any price level or pattern or Chapman wave tool that suggests to you some particular price level and or pattern is a good or a what you call a higher confidence target for this decline to reach and possibly pause declining short term? So that's my very specific question. if I could, sir, I'd like to listen offline and study what you're having to say.
Okay, good. So, John, let's get to this right away. Thank you for the question. So the index 100 is trading down. I better take a sip of tea. The NDX is trading down 130 at 17,263. I've articulated those round numbers. This is a pattern that I had discovered way before the October 19th, 1987 crash. But on that day, the 19th, I had never seen so many round numbers ever. I mean, GM would open, I don't know what it was, but let's say it opened at 66. It made a round number 44 or 40 low. I just saw them all over the show, and that's the reason why I thought, hey, that's a buy signal if ever I've seen one. Within 18 months, we should make a new high. However, the ones that are happening now are all on the upside. We just spoke about NVIDIA with a round number high, 974.00. I call that fear of missing out high on the 8th of March, and it goes tumbling down. I spoke about for the last couple of days that Netflix had an exact round number, 639.00, round number high on the 8th of April, and yet it is trading at 568. They're very important. You just don't get rid of them very easily. So, let's go back to the NDX 100. The NDX 100, trading right now down 143 at 17,250. The first real target of support is this candle. First of all, the low of the week of the 2nd of February at 17,128. But it's actually the candle right here, this candle of the 19th of January, that has a high of 17,317 and 16,561. If on Tuesday, give it the rest of the day today, because there should be a rally attempt. I mean, we were oversold. There's no question about it. And that V-shaped pattern, 700 points down in the Dow last night and then 700 points up is amazing. It's actually more because now you've got yourself up 200. So that says that buyers are there, and I don't have time now, but I did it when I did Tommy's show just the last hour. I showed there are some stocks like Nike, which is in the Dow, which is doing very nicely. I showed the patterns and all that. So all I'm saying is that key support on the NQ, on the NDX 100, because we've taken out some very important levels, is right here on the 31st of January at 17,000. Is that the Dow? No, that's the NDX. So, at 17,128. That's kind of important. I can't do it now, but I've done it in the QQQ. Look. Oh, I thought I had done it. It was a SPY that I'd done. So let me just use, if you don't mind, I've got so much information on the Qs. This is an important candle, the 21st of February at 421.63. Today, we've been down to 418.52. So that just says to me that the 9-period moving average, very weak. The MACD, very weak. On-balance volume, very weak. Stochastic at 4% is getting close to an area where there should be a rebound, but that confirms the weakness that is at 4%. So rather than giving you, I'll do work on the weekend, and certainly for my subscribers this afternoon when I do my overview video for the looking ahead for the week, I'm going to suggest, this is already an E right there. I'm going to suggest how we deal with it between the low of the 21st at 421.63 in the QQQ and the low on the 31st of January at 416.79 is going to be really important. And the most important thing, even besides daily charts, is look at the way the weekly chart, look at that candle. Unless we have an inside bar next week, the 9-period moving average hasn't turned even close to negative. So there's still buying potential. But look at this, look at the price that we've come down to. So it says really important. I'd rather say to you, 429 is major resistance in the QQQ, and this whole area of 418 to 417 will be key support level. I need to see the price movement give me a clue that but the semiconductors are in there, and the semiconductors are just beginning the consolidation. That's the way I'm looking at it. John, I hope that helps you, other than to say I'd rather be looking at what the bounce could give, because the downside we've got clear troughs to look at. I'll be back. Dow's up 187. S&P's down 8.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26th, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26th, Tigers. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. Just to sum up real quickly, for anyone interested, check out what we call the newsletter, and I will be doing my overview video, my weekly overview video. I'll be doing it after the market close. I see enough rotational strength right now to have a bounce. We're so oversold. We should have a bounce, especially after yesterday. So I think during the next hour going into Larry's show, and don't forget, Larry, a week from today, does his live trading. Fabulous. I got to listen to some of it the other day. Just terrific stuff. So here we go. The VIX index. If the VIX index right now trading at 1848, down 48, hit a 2136 high, actually pulls back to the 1678 level by Monday, I think we're ready for some kind of a bounce. But the SMHs have finally caught up to the others. They're digesting huge gains, and the whole tech sector, especially with what I showed you with the round numbers, NVIDIA made a round number all-time high, and it's now way below that all-time high number. I haven't got it right in front of me. Was it 965? What's going with my mouse? There it is. So 974 round number on the 8th. Here it is at 824. So these digestive phases for the real big winners. I mean, Apple, I was asked about Apple. So Apple trading right now down, gap down again. They're taking out the left side low of October. These are not good signs, but it's very selective. So I'm just saying, my work says that 9-period moving average under the 14 in these major indices, the final one was the SMH, says we're in a digestive phase. My work says that the Dow and all the other indexes that are making those peak Ds in the weekly chart, I have to watch that really carefully. I didn't expect them to get to a D so quickly. And now you're in this digestive phase. So I'm just saying, be real careful. We've raised cash. We've got our short positions. We're looking at weakness, and we've got our stocks that we wanted to buy. I mentioned Nike. I did this whole thing during Tommy's show. Look at that beautiful cup formation with round number lows. Look what happens when you make round number lows. Here it is at 95.99. Very nice action. Have a wonderful rest of the weekend and the rest of the day, and stay tuned for Steve Rhodes and all the great programming. Check out my Opening Call daily newsletter. See you on